Thank you, Angel, and Heidi ho, everyone. Welcome aboard. It is Tuesday, 26th of Rocktober. I used to celebrate Rocktober when I was in the radio game. That's going back a long time ago. How long ago? 1970, 1974. A lot of you people wouldn't have been born, right? But yes, indeed, I can go back to there when Rocktober first began. I think it first began in maybe 72. I could be wrong. But I firmly remember that we used to get very excited in the radio station when October came around. It became Rocktober. And it still is in many parts, I do believe. In other parts, it's simply good old 10th month of the year. And here we are. All right, that's enough of the chit chat. Let's get on with some trading, shall we? If we can actually find some moves to make here today. I'm going to start, as always, with the pound US dollar. And those of you who are not familiar with the way we do things here, welcome aboard first up. If you're just joining us for the first time, what we attempt to do each and every day that we trade, that is, not on Saturdays and Sundays or Christmas Day or Easter Sunday or anything like that, but the days that we trade, we try to capture the breakouts of the pound versus the US dollar at the open of London session. Now, of course, that doesn't always happen. Well, two things. It doesn't happen that the pound actually breaks out of a range. And the other part, of course, is we don't always catch it when it does. So, well, we don't profit from it when it does. What we're trying to achieve here is find a method of doing that, consistently getting into, if there is a breakout, into the breakout and managing it the best way we possibly can so that we make money consistently out of this particular scenario. So that is what we're attempting to do. And at this moment, we have got two trades in the market. One that we entered here, that we have taken profit on. This is actually a trailing stop on that. And one that we entered. When did we enter this? Goodness me. I can't remember. But we are back at entry, having been in profit, having been in drawdown, and we're pretty much back at entry. I'm going to make a confession here. If this does not break through this level today, I think I'm done with it. The interesting part, of course, is that we have a nice tight little range in the last 2 days, which is bounded by where our stop loss is for whatever day that was last week. And the high, of course, will be the new entry, because we will take this on, I do believe. If you judge that to be the low of Monday, yesterday, and that to be the high of yesterday, we can completely forget the day altogether. And therefore, we're trading the breakout of yesterday. I think we're entitled to do that, given the tightness of the range. What would happen is we're looking for a TP1 before a strong resistance level. Still haven't got that. We have it to the support side, but we don't have it to the buy side. Interesting. Let's see what the first candle does anyway. 68 pips. I think we need to place this order, so we will. We're going to buy. Now, those of you here for the first time, this is in absolute beta test mode, so do not put any meaningful money on this trade if you are going to follow it. The entry is going to be at 1.3797. That's for the long. 1.3797. Now I'll go into the aggregated risk part about this in a minute. 3797, I think I said, which is a terrible place to enter the market, I've got to say. And the stop loss will be underneath that. 1.3732 will be the stop loss. Okay, so there is the buy order. Very, very minimal amount of money on this. As you can see there, there's absolutely nothing. Oh, didn't like that. 3732, 373679. No. Buy stop. That's why. 3792 perhaps. Does that make sense? What am I doing wrong here? 3797. Okay. That's the buy. I don't know why I've got it as that. And the stop loss, 3732. I don't know how I got that all wrong, but I did. Okay, there we go. There is the buy order. Entry here. It's starting to get a bit messy, this chart, because we're in 2 trades already. The one from yesterday didn't trigger. That was up here somewhere. We are going to cancel yesterday's, right? We're going to cancel yesterday's, those of you who were in yesterday. Delete that one. Right, so that one from yesterday is gone. The sell stop from yesterday needs to go. I'll get rid of that in a minute. Delete sell stop. There it is. That's done. So we're only interested in the new trade, which is enter there, stop loss there. Of course, it is a one cancels other trade, which means that if we buy, we only buy and we delete the sell order, but we also place a sell order. And if the sell order triggers, we delete the buy order. Pretty simple. As I said, if this doesn't break out here today and we don't get into a long, in particular, if we close below the pivots, I'll put it that way, it was the same as yesterday, which I didn't do. If we close below the pivots today, I'm over this trade that we've come back into, because we've been in it since here. It's just been silly being in it so long without getting anything out of it. So we're going to place the sell order. Sell order is the reverse of the buy. So we have a new order. Again, minimal risk on this in terms of dollars that you're prepared to risk. Nothing more than a beer or something like that, because it is very much in test mode. 3732, I believe, and 1.3797. Okay. Done again, haven't I? 373, I've got buy limit there. That's what it is, sell stop. Okay, happy days. So we've got our entry here, 5 pips above the high of that bar, rounded up to the nearest pip. And the entry short is 3 pips below the low of that bar, which of course is the range that we're trading. The range that we're trading is all of yesterday plus whatever's happened so far today. That actually converts to yesterday only, because the high of yesterday and the low of yesterday is containing price at the moment. That may not be the case for long. Let's see how that works out. Rightio, that was a whole lot of explanation. G'day, John. Yeah, going well, mate. Thanks. Oh, well, I think I am. Gee, I've had a big day. New bathroom. Demolition day today, and I volunteered to labour for the guy ripping it apart. Should know better, shouldn't I? Every scintilla of my body is wrecked in pain. Guess what that means, John? It is too much work. Guess what it means, but this is Tuesday. You're right, correct, beer time, but actually it'll be wine, I think. I'm too buggered to have a beer. Yeah, definitely right. Cold wine. Okay, let's get on with the show, shall we? We kind of got to start the week again, because I'm completely out of touch with what's going on. Tuesday, I did make some notes. I've got one to watch. Kiwi Cad it is. Now, I will review a couple of things before I go any further. Aussie Yen, we spoke yesterday that Aussie Yen was indeed in a very, very important position. And here's why. Confluence is all over the place. The weekly pivot, daily pivot, sandwiched together. We've got a support trade line that was broken or had been broken, and we were coming back to that level. We were very keen on placing an order here, but we didn't know which way it was going to go. My bias was actually to go short. And when we got above, let's say on the confluence area with these bars here that just went tap, tap, tap on yesterday's daily pivot, but refused to close below the weekly pivot, which of course is most important. And from that perspective, we have now bounced long. It looks like at this point in time that may well be the direction this wants to go. These trade lines are now null and void, and perhaps they've already done their job. Not the way I wanted them to. I wanted them to show me a reversal bar here on the trade line so that we could trade it short, which was, of course, with my bias. Now, do we give it up? No, siree, Bob, we do not. We do not say, hey, Lewis, how you doing, mate? We do not say that this is a fait accompli, that this is going to break through and create a new high. Far from it. What we have in exactly the same perspective as we had yesterday, a big game changer bar on the daily chart. Not that that was yesterday, but going back to where last Wednesday or Thursday, probably Thursday. Big game changer bar off the top of the range. Now, it doesn't look like the top of the range on the weekly chart, I must say, but there is still a strong presence about this area. And if I squeeze that up a little bit further, you can see that we may not be there yet. And that's the issue that I had, and why I wasn't prepared just to go with my instinct, which says we're going short. Not that I ever do. I look for a setup first. But this area still is in play, in my humble opinion. And you can see the recent resistance from a horizontal perspective, from a top of channel perspective, from a rejection of the monthly, if you like, if you please, rather, trade line. So I can't give this up in any way, shape, or form until it shows me on a meaningful time chart, daily 4 hour, something like that, that it's going to take out the high. And I don't know that yet. It's very much a let's watch this space scenario. What I am still looking for, therefore, is off the bearish engulfing bar, which doubles as a key reversal / game changer bar, looking for a lower high. Now, if it matches this high, I'll then still look for a lower high until this closes above this high. So I'm still short biased on Aussie Yen. There's no evidence to suggest I can trade it right now, however. It has gone a little bit beyond that level, and that's fine. Could be a false break. There's one thing that I am considering here, and that is playing the false break. Sorry, I would be considering if I didn't have the pivots there, but then maybe it's still there. We may have a false break at the top of this. It's not really a range, I wouldn't suggest, but it is a previous high and a lower high based on this bearish engulfing bar. So it could well be a false break of that level. And this is where we can take advantage of that by trading a single bar false break. 37 pips down to 19. It's about halfway. And I'm okay with that. I'm inclined to trade that, frankly. What's the hourly telling me? Yeah. No reason why we can't. I'm going to place a small order. It's only going to be a small order. It'll be 0.25%. Now, what I'm probably looking for here is the lower high. Had that bar been just a little bit more toppy in size of its tail, then I'd be more confident. But because we've got a good run up here, I think the order underneath the bar, stop loss above it, with first take profit just before the weekly pivot, I think we'll be okay. So let's place that order on the 4-hour chart. I'll give you the levels. I'll write them down. It is Aussie Yen. We're selling at low of that bar is 85.30. So let's go with 85.27. 0.85, sorry, 85.27. That'll be the entry. The stop loss will be 85.67. So 0.8, sorry, not 85.67. So 40 pips of risk. And our first take profit weekly pivot level is 85.08. So let's go with 85.09. 85.09. That gives us 18 pips out of 40. I'm fine with that. That's more than 1/3 of my risk, so I'm happy to go there. I'll just place that on the trade manager so I don't have to be concerned with it. Okie dokie. Like I said, this could be very early, so I'm only going to go in at 0.25% risk. 0.25. And we will not do break of bar. We'll do the level, which I said was 85.27. And the stop loss was 85.67. If I'm not mistaken, yep. And get rid of take profit pips. We'll go to TP1. TP1 we will nominate as 85.09, at which time we'll take half off the table. So close 50% of the order. And we will move our stop loss, how many pips? 85.20, so 18. So if we take 18 pips of profit, we're going to move our stops 18 pips from entry, which means, of course, that it becomes a free trade instantly. We will disable TP2 because TP2 is likely to be down here somewhere, but we've got to get through this level as well. So we need a little bit of versatility there. And that is it. So there's the sell level. There's the stop loss take profit level. You can't see, but it's just before the weekly pivot. That's Aussie Yen. Now, the reason I'm keen to sell Aussie Yen is, as I've said before, I think we're at that resistance area. It may be early and we may not be at that resistance area, as I said before. It may be up here, but I was basing all of this on, okay, let's get a higher low and trade it up to there at some stage. But there could be, there could be truckloads of pips available on the way back down. 300 and odd pips still fulfills the cycle. So 400 pips fulfills the cycle. So for a risk of 40 pips, that's 10 to 1, and then we can go again. Makes sense, right? Okay, that is Aussie Yen. Now I also have a watch on Kiwi Cad, which I don't have on my chart, or I don't have on this chart anyway. Kiwi Cad I thought was the best of the day. If I could find the dash thing, there it is. Let's just fix that up. Ooh, holy blue. I might get rid of that. It's very disconcerting. And I don't think it's relevant to this chart. No, it's not too dusty, but let's get rid of it anyway. Why do I like Kiwi Cad? Well, Let me get rid of all this and point out to you on the daily chart what is actually occurring here, in my humble opinion. So we've got big head, we've got a double, maybe even a triple left shoulder, and we've come back up to that level. And thus far, we've been unable to break that level. If I break that down even further, that's gone into range in here. So if I go into this little range, which you can put on your chart if you so wish, two obvious highs, plenty of obvious lows here. Those of you who don't know what I'm doing, the criteria that I use for a rectangular range is the same as I use for pretty. That wakes me up too, John, and I need it. George is in. We'll be going to George very shortly to talk about what George has set up for us in 5-minute charts on the big ones very, very shortly. But I just wanted to point this out to you. That level there, as I pointed out from the daily chart, which is equivalent to these rejection levels, spikes, left shoulders, call them whatever you want, has been retested and retested a couple of times. So I'm expecting that there may well be more range to come here. And if there is more range to come here, I'm more than happy to trade it off the top and look for the bottom. I can't just go bang, okay, this is ready to go. However, I need to see something a little bit better than that. And this would be pretty much in focus. Had I been looking at that an hour ago, this is exactly what we've just traded, right? Is it not? Bullish break of the range. And what are we trading? Aussie Yen. Aussie Yen on the 4-hour chart. Bullish break of the range. Or if you don't think that's a range, then it is still that high, right? So we've broken that high. If it is wrong, so if the bulls are wrong here, they're going to be wrong at the bottom of that candle. And that's where our entry is. And we're going to take profit at just before the weekly pivot. So isn't it exactly the same scenario here? We've broken the range with a bullish decisive bar. And again, if the market is, or if the bulls are wrong, they're going to be wrong here. And that's what we're seeing at the moment. Because we missed the entry, what I would wait for here is a lower high in this vicinity. So if price came down to here, came back and hit that level, I think you can find an entry there, trading it down to the daily pivot in the first instance, but in extension down to the monthly and or the bottom of that range. So I think that makes perfect sense to me. Yes, I've missed the entry, but a lower high does get me interested. What gets me interested all the time is having a good old yak to me mate, George. G'day, George. How you doing, mate?
I'm well, Jeff. How you doing, mate?
I'm excellent. Looks like it's cool there. You've got your hoodie on.
Can you believe it? I mean, we kind of thought we are into spring, but we've just been hit by a cold spell, heavy rains, and the dreaded electricity.
Me too, mate.
Well, there you are. I mean, you shouldn't have that on an island, man.
I should what, sorry?
You should not be wearing that on an island. You should be wearing your nice T-shirts and vests and stuff and get in the sun.
Yeah, but the island kind of slipped down to the bottom of the world. and we don't get the sun down here until Christmas time, basically. So spring starts at Christmas, where it should be summer, right? But that's the way it is in Tassie. And that's the way I like it, I've got to say.
Yeah, it's hopefully our summer will come back. You know, we have all these interesting times here. You know, when summer comes back, we look forward to good old things like fresh green millies. I don't know if you have fresh green millies there, Jeff. You know, but it's just
millies.
Millies, yeah, millies.
What are they?
I think the Americans call it corn. Corn, C-O.
Oh, yeah, okay, yeah.
But
corn or maize, yep.
Yes, maize. That's it. Fresh maize. So that's what we're looking forward to. You know,
yeah, it's gorgeous, isn't it? Sweet corn, sweet maize, yes. Yummy.
you know.
So now I know
So
what
yeah,
you're talking about.
now you know what I'm talking about.
Yep. And I wholeheartedly concur with your thoughts. But interesting, isn't it, that, you know, we all this talk of climate change,
Yes.
and it's well, it's more than talk. It's a reality. The climate is changing, and now I think it becomes more evident to people that that is actually the case, because the weather, of course, being climate, is doing weird and wonderful things. We're having tornadoes here on the mainland of Australia that have never been seen before, to my knowledge, anyway.
Wow.
Yeah, we have what's called willy willies, which are like tornadoes in training, I suppose. They're only tiny little things that you can see the dust swirling. But we're now having full blown tornadoes, and I've never known that in my 64 years of existence. Wow. So there you go.
Well, everything is kind of shifted around us. I mean, just this whole pandemic and how it's changed businesses and economies and lives. Yeah. It's just we have to nothing is set anymore, right? In concrete. The only thing that doesn't change, Jeff, since the dawn of time is price action.
Well, I'm with you, George. It still comes back to the central area all the time. May go to there, but it always comes back there.
You've got to find that balance. That's it, you know.
Mm-hmm.
And then someone thinks they've got the energy. They try and break out of that, you know. And someone says, "No, I'm going to make it fail and pull it back again." And we got to just read that.
That's what I live for, George. False breaks. I think they're far more interesting than anything else on the charts.
Yeah. You know, I wanted to ask something. You know, when I talk about what I'm looking at just now, and I've been scratching my head, and as a poor student, I didn't take enough notes when you were speaking. So I'm going to ask you as a teacher.
Okay, sure, mate, sure.
So the way that I trade, I know we've kind of said there is that's the wrong chart. I'll talk about this. Let me do that very quickly. So every week, beginning of every week, I have a quick look at how things are shaping up on the weekly time frame, because that gives me a good sense of where the week might go, but also where the market is. So if you have a look, this is just the euro. I'm going to do this very quickly. The blue low of last year, high of last year, and this 50% mark is the midpoint 50%, the range of last year. And you can see how the market, as far as euro is concerned, has been pulled down to that level. I'll then, of course, look at the daily. I want to get to what I want to talk about just now, but I think this is interesting. Gold, high of last year, all-time high again, that green, low of last year, 50% pullback. Just see how, again, the market has been pulled to the 50% of last year's range. And as we go into the last couple of months, in a big war there to say who's going to control that. The bulls are obviously going to end up 50% higher, above the 50%, the bears below. But the US 500, you asked the question last week. We were speaking about it. So again, look at this high of last year, low of last year. So just accelerated way above that. But with price action, nothing is ever a surprise, because we always say if we do get a breakout, it's a successful breakout. So breakout, pull back, and market broke out. The guys creating the breakout, in this case, the bulls, they want to see a measured move. So there's a high, and the measured move is up here. Okay, so as far as the bulls are concerned, they haven't seen the breakout above that. That's the target. That's where they want to go. So the bulls are saying, well, okay, this is just correction, take profits, fantastic, but that's where we want to go. Now, what's also interesting, just look at this particular range here that we've had. A low, high, measured move is up here. So as far as bulls are concerned, it's a little bit more for them to take out of the market. Bears, of course, want to make the whole thing fail. But at this point, the big magnet is up here before we even go up there. Some of these things you guys probably looked at. In any case, FTSE, high of last year, low of last year, 50% pullback. So this market, again, is gone quite ways above the 50% pullback, but bouncing off that breakout point, which, like we mentioned last year, is the that COVID breakout. And their prices kind of hang around that. That's become a pretty key area of resistance for the FTSE. So again, if you look at this trading range, measured move to get us above the high of last year. So the bulls would like to break out above that and get to that level. And this price action here seems to indicate that if we break above that pullback test, that's the target. Oil, interesting. If you remember, just a bit different where we had in gold. High of last year, low of last year, way above that. And the market has broken significantly above this trading range. But the goal is this measured move. That low, that high measured move is up here. That's where the bulls want to get. So this strength, although we kind of bounce and going sideways, the objective is to have a very strong bullish price action. But where would they want to go? That's where they want to go. I'll tell you why how I use all of this now on the daily time frame. So Hang Seng 50, again, high, low, 50% pullback. The black line, black is high of this year, low of this year. Okay, so that's a 50% of the year presently. Now, getting to yen, so the Nikkei 225. So I can ask the question I wanted to ask Jeff, but first on a weekly time frame. Okay, high of last year, low of last year, way above that. So that's a 50% even get down there. Trading range has been created. So whichever way you look at it, if you're a bull, although we're at the midpoint, you want to break out and get to that level. If you are a bear, or the bears will be saying, now hang on a second. Sorry, let's do this. If we break beneath here, that's the high of the trading range. That's where the bears would like to go. So we are at the midpoint level. But what's interesting now, so that on the daily time frame, this is what I look at in terms of trying to find. This is a bit of a nice classic one. Let me just clear this to make it easier for us to see. So what I would have been looking at, so this is today, this is yesterday, even coming to the week, I would have said, okay, there is a micro double bottom there. There is a strong bear price action coming off the test of that breakout point. Now, two things. If the bears are strong, what do they want to do? The bears would have wanted to break beneath this, but on Friday, they failed to do that. They gave us an inside candle, which is breakout mode, huge tail at the top. So still, if the bears are strong, they would have tried to break beneath this. And if they had the strength, pulled back, tested the low of this macro double bottom and carried down below. But let me show you, there's a little pattern that we had in here. Well, I say little, nothing is ever little with price action. Anything that you see on any time frame is significant. So that triangle pattern at the moving average, whenever you see an inside candle, that's a breakout mode. And breakout mode means market is likely to break out either above that or below that. But if it does, the first point of business to come and test the apex, okay, and then there's acceleration. So we had breakout. Usually it happens in a couple of candles. So that's pretty long, a lot of price action. So for me at that stage, I think the force that controls this is kind of weakened, but it's still significant. So when I get this micro double bottom here, there is still a force at play here. So I would have been saying, okay, here's what might happen. Breakout beneath this, I want to look for an opportunity, okay? Or if the bulls are strong, they would make sure that any breakout beneath that micro double bottom is a false breakout, turn it, and then look for acceleration. Now, Jeff, the questions with my mindset of saying, so that's part of the equation, okay? Yep. So when I'm looking at part of the equation is micro double bottom, we fail to break beneath this, and the market turns. And if I'm able to find an entry, I'll go to the 5-minute time from now and show you how the entry would have been absolutely perfect to get into that. Then you get into the trade, and end of the day, you can close your trade or find a nice position, put your stop, and look to carry on with follow through. Would that kind of thinking qualify as a slingshot, I wonder?
Which one, mate?
So, okay, let me go to the 5-minute time frame now. And hopefully it's a little bit clearer. Okay, so that's today. So that's yesterday. Excuse me a moment. I want to put the high low of yesterday so you can see it clearly. So yesterday, the micro double bottom that was of interest to me would have been that on the daily time frame. Okay, so when I go down to the 5-minute time frame now, two ways of thinking about it. If the bears are strong, they will give me a strong break beneath that micro double bottom. Come back and test it, and then I can look for an entry to go short. If the bears are weak, they haven't come down all this way, the thing is maybe they are creating for a potential move up. Now, in my mind, that creating a potential move up, I wonder if that would qualify as a slingshot, because I'll be saying if they attempt to break beneath here and fail, I gotta find an entry because you might have a long move up here, which happened on the 5-minute time frame of yesterday. Okay, so right here. So that was the failed break of that micro double bottom. And then in here, I gotta look for ways to go long. Now, I'm not gonna take it here. I'm gonna say fantastic. That's a false break. Now I gotta find ways to go long. I need a bit more confirmation. When I see a close above moving average, that's a potential entry. Or if you don't take that, you're gonna have to wait again for any of the entries above here. So I wonder if my thinking would equate to a slingshot, or am I being too ambitious with that kind of thinking?
I don't think you're being too ambitious at all, because the way I would analyze the potential movement next on euro dollar. Oh, sorry, what do you want?
This was Nikkei 225, yeah.
Oh, okay, whatever. It doesn't matter what it is. Chart's chart at the end of the day.
Chart, yeah.
So when I look at your chart, and the bigger picture is telling me that we've come off the bottom of a range.
Yes.
And when we come off the bottom of the range, there's only really one thing in my mind, and that is to find a long.
Right. Okay.
And the way I would find that is either as a result of a higher low, or I would trade the higher low, dependent on what the candle is telling me. Right. Now, if the candle is telling me that the bears are trying to take control,
right,
that's the candle I want to see. I can then place an order long above that, because if the bears do indeed take control,
right,
then away they go. I don't care, because I'm looking for a long only anyway.
Right.
But if they're wrong, they're going to be wrong at the top of that bar, in my humble opinion, because that's where there's going to be stop losses.
Yeah.
And stop losses for a short are buy orders.
Yeah.
And if I buy there, I'm joining buyers.
Yeah.
And therefore I should get some form of momentum to the high side. Now that generally should take you to a first resistance level, wherever that may be, whether it's an EMA, a trade line, or a trend line, or a horizontal level. It'll be some form of resistance. So that's precisely what I would be looking for. Now on that chart, after that low, the very first opportunity I see to go long is the big decisive bar that creates the bear bar, back 2 bars, that one. So when I see that, and I've got indecision before it,
right,
and I've got a high just before it, before we created the low, that then forms the high before the low.
The high before the low. That one?
Yeah, low test bar off the EMA. Go back
Okay.
left a bit. No, keep going back left. Before the low of the day.
Oh, okay. Right.
That one.
Right.
Yeah.
Right.
Okay. So that's created a little trend line for me. So I can draw a trend line across there to the next high.
Okay.
So then I've got a rejection of that level with the little doji bar backed up by the the one before the bear bar, the big bear bar.
The one, that one.
That one.
Okay.
Yep.
So you would look through that.
Yeah, I'd take it right down that line, right down to the highs actually.
Okay.
And make that a trade line.
Okay.
So once I see that rejection as a third touch on that line,
okay,
and the big bear bar,
right,
that's the one I'm interested in.
Okay.
Because as I said before, if the bears are truly in control, they'll take it down and they'll test that low. Yeah. But if they're not, logic tells me that they're going to test the next resistance level. Now there's soft resistance in that high test bar on the EMA. There's no question. So you would have to take that on, and there's your risk in the trade.
Right.
But then you're actually backed up by the low test bar that follows that bear bar.
Yeah.
So that's really confirming that the bears are not in control at all.
Right.
So you could either look to trade that bull bar,
right,
the low test bar, or above that red, or above the red bar, whereas I would place my order. Yeah.
Excellent.
You don't get much out of it on that occasion, unfortunately, but you've got to take profit, obviously.
Yeah. Well, the difference then in the way that I trade is once I get into that, the most important thing for me is where I put my stop. I've always stops must be at a technical level. So that's where the stop is, which is still below the micro double bottom. And then I want to hold it, Jeff. I want to just hold it and see how far I go. I'm going to ignore all of that. And when I get to a stage where I've broken above that, for example, break above that and pull back, I'm happy now to move my stop to break even and see if I can get in anywhere else. Because my whole thinking is if I can catch that move from that micro double bottom on the day and hold it, there's a lot more profits for me on that initial trade. And then in the day, if I find something else, I can build a position. Yep. So I don't take off a TP1, which is a different completely to how you trade. I want to just hold it, trail stop, and see how far I go.
I'm actually trying to do that, George. I'm actually trying to change from a 30-minute trader, if you like, to I've been day trading daily bars and weekly bars for years now, and I find that very comfortable, frankly, because I haven't got the time to spend in front of the charts that I used to have. But I'd love to be able to catch exactly what you've just described,
right?
By best stop loss placement, because really what I've done in the past is just trade a candle,
right?
And that you can have a good fun time doing that, but as you say, if you want to stay in the trade, you have to have your stop loss at a strategic level, which in that case couldn't be more obvious, could it? But that I think is probably the key to staying in the market for as long as you can milk it. But I love the aggressive nature of, as soon as you hit resistance in this occasion, move your stops to entry. You'd be out there, but I think that makes me smile, because as an old man, I don't have to worry, because once I've hit that level, I can't lose. And capital protection to me is super important.
Okay. Now, Jeff, and I know I'm taking up your time. Let me just show the guys something.
Not at all, mate. I'm more than happy to have this conversation. I love it.
So now I've skipped to euro versus dollar, and this is interesting in terms of what we're talking about presently. So this price action that we have here, inside, outside, again, breakout mode. Problem is it's a bull candle. This is on the daily. So when I saw that yesterday and that turn, this was not on my watch list again, because simply what goes from so the seven markets you see down here, those markets that I'm trading. What goes from those markets into a watch list is when something is set up, like we're looking at the Nikkei 225, that I think, oh, hang on a second, this is tradable. Then from there, it's execution. So right now, when I was looking at it yesterday, something was setting up, but I'm not going to jump onto the day. I used to jump in, and because you can jump in and just trade the day as it unfolds before you. But that's, I gradually realized I don't like that kind of trading, because I'm not a scalper by nature. I can't scalp. I just
we'd like to be though, wouldn't we? I'd love to be able to do it.
Every time you read about a scalper, you're saying, man, I must try that. And then you come back battered and bruised from battle, and you realize, okay.
Totally. If you trade only what you think, you're going to end up in trouble.
That's exactly it, So, but then we ended up with an outside candle yesterday. An outside candle is a trading range. And if you're in a trading range, you're buying low and you're selling high. So what I'm looking at now on the euro, so this is definitely down to today's watch list. I'm thinking, and I could be wrong, and I always say when I think I'm right, I'm only right 60% of the times. I'm 100% right 60% of the times. So presently I'm thinking, okay, bottom of the trading range, that outside candle, I want to see if this will be tested, the low, or again, a clearer trading range created. Then I'm going to be looking to take in entries at the bottom of the trading range, and hoping that there will be an attempt to break out, which likely will fail, come back and test. And if that happens, then you can build a position. Or if the bulls happen to be strong and I'm wrong, they say we can break beneath the trading range, I really need to see a strong breakout. And a strong breakout for me is successive bear trend candles, pull back, then we can start to look at it. But the present mindset is bottom of trading range on the euro, and let's see if it forms up for me to go long from the bottom of the trading range. So that's what I'm looking at, mate, at the present time.
Can I point something out to you that I didn't see? Yes. If you go to the daily chart on the euro, George,
okay,
I'll show you something that's been very profitable for me.
There you go.
Okay. Big picture is downside for the euro, in my humble opinion, right? So you monthly chart, weekly chart, whatever chart you choose, to me it's showing weakness. So what I look for here is a thing called a game changer bar, my term, but it's actually known as the key reversal bar. Now, what a key reversal bar is a candle whose high, in this case, if you're looking to go short, which the market is telling us, big picture saying short, a candle whose high is higher than the previous session or day, really, but it can be weak, and closes on or near its low. So if you go back to Wednesday, Thursday, Friday, Thursday's candle.
Thursday's candle, where are we? Yesterday, there.
The red bar. Yeah.
The red bar, yeah.
So that qualifies as a game changer bar, and it's at a great level, right? So if you're thinking short, then that's probably a tradable opportunity for you. Yes. But the next bar is what I call game changer plus.
Okay.
A game changer bar plus an inside bar is really telling me something. Right. It's really telling me that the price is going to go where the game changer bar pointed.
Okay.
And in this case, it has done that. These are rare, really rare. They don't come up too often. And have no idea why I missed it, but I do know because it was on Thursday to Friday, and I don't trade on Friday, so I missed it completely. But I should have seen it yesterday, and I didn't see it yesterday. But if you write that one down in your little book, because it's very, very powerful. If
so
you go
doesn't
back,
matter what color the
no, it doesn't matter as long as it's an inside bar.
As long as it's an inside. That's quite good, because then with that, I would have been looking then from the open for a reversal if it tries to break above that and trade all the way down.
Yep, completely.
That adds on to. I'm gonna have a look at it, because if I'd had that in my armory, that would have moved from trade alert to trade execution for sure.
Yeah, no, look, it's really worthwhile. The key is the first bar, obviously. Yeah, it has to be right. And the second one, if it's an inside bar, it's an inside bar. You know, it is what it is. But the first one's the key. So going the direction, the low is lower than the previous day, and it closes on or near its high. Yeah,
brilliant.
There's one back, or it looks like there's one back on the maybe 8th, 10th September off the EMA.
8th, 10th September. Somewhere here.
I can't see your cursor.
September.
There. Okay, so if you go the second high test bar, go forward 3 bars.
1, 2, 3.
That one. So the first one, its high is higher than the previous day, closed on or near its low. I'm not sure if the next one is an inside bar, but it looks very close to it.
It's close to it, yeah.
Yeah, and then bang, away it went.
Wow. I've never seen that, mate. I really appreciate that.
Yeah, look, it's a good one. But I don't know. It may be pertinent on smaller time frames, but I've only ever noticed it work well on weekly to daily charts. So if you get your bias on the weekly or the monthly chart, it has to go with not necessarily trend, but the market. I'll call it market structure. Has to go with market structure. And if market structure is good, the daily bars really do point in that direction. If you get that, what is known as a key reversal bar in technical trading terms, followed by an inside bar. It's a really good one.
You know why I like this? I mean, it's I don't want to take up time, but remember on the Nikkei 225, I mentioned that convergent triangle inside candle. The forces are almost the same. I've just never paid attention to it, because I would have waited to see an inside candle. If I get inside, and I call that breakout mode, and then it goes in that direction. But I mean, this I've seen this many times when I'm looking for that third candle, but I've just never studied it. So,
okay,
really appreciate it.
Yeah, look, if you come up with a decent result, let me know. But I mean, I trade it all the time if I see it. But I'd be pleased if you can find it on different charts as well. That'd be great.
Thank you very much, Jeff. So tomorrow, for the guys who can make it, 9:30 GMT.
What time's that?
Oh man, I mean, just look at GMT. Forget about London time and +1 hour, -2, whatever it is that's happening. Just GMT is 9:30 GMT. So that's to probably be an hour and a half from now. Also 11:30 South African time.
Perfect. And there was a question from Lewis. What part of South Africa are you in there?
I'm in Johannesburg. You know, I was speaking to a friend of mine. He was telling me, "Oh, Canada is beautiful, etc." And he was saying, he's telling me this crazy stuff that, you know, he was driving around at midnight somewhere, and then there was no cops, there was nothing, but he knows that he has to slow down at a traffic light and stop at midnight. I said, how boring. In Johannesburg after 10 p.m., you don't slow down, you don't stop at a red light, you know, you just kind of
you keep going, man.
And you just go, man. This is where life happens.
Oh dear. I'm not sure I like those circumstances, George, but you're smiling, so it tells me it's got to be okay.
No, it's beautiful. It's beautiful.
Now,
But
this is your last Tuesday, right?
this is it. So confirm with me, it is the same time, but on a Monday.
Same time, but on a Monday, correct. Now,
Next week.
it does become a little more complicated.
Okay, tell me.
Because next week,
Yeah.
UK Open or London Open is 1 hour later.
Oh my goodness. Um,
Mate, I'll send you a
send it to me
map.
in GMT. Send it to me in
I'll
GMT.
send it
Not,
to
not
you.
London. GMT.
Okay. Essentially, if we relate it to now, this is the way I understand it.
Okay.
You'll be on 50 minutes. Hang on. Forget it. I'll send you a Skype message or something with the right GMT time.
You know, it probably doesn't change for Johannesburg. I think if it's GMT, I've always thought the London market opens 8 o'clock South African time. So if it's GMT plus 2, it's 10 o'clock my time. But don't worry about it. Look at it at GMT and tell me.
I will, mate.
And we can confirm in the morning to say, are you in an hour or 2 hours? That also helps, at least on the first Monday.
I'll give you a countdown. You're on in 10, 9, 8.
Exactly. Switch on now.
All right, buddy. Have a great week, and we'll catch you next Monday.
Thanks to everyone. Appreciate it. Cheers, Jeff.
Cheers, George. Okay, time differences aside, let's take a look at what we have in questions. So, and there are quite a few. In Skype, g'day SF, by the way, I didn't say g'day to you earlier. You're looking at a dollar yen short. My favorite not trading currency pair, but let's take a look at it and see what's going on. Dollar yen. Dollar yen will be up here somewhere. There it is. I think some of the team are in this long, actually. Not me. Okay. Yeah, look, it's got some prospects, I've got to say. Let me have a look at the dollar index. There's the dollar index, which is suggesting, okay, you've got a hint here, in my humble opinion. The problem is dollar yen and the dollar per se don't seem to correlate in my mind anyway. Every time I think the dollar's strong, I see dollar yen sell and vice versa. So I'm really not the best at this, I've got to say, but I'll give you my technical opinion without question. So this is the 4-hour chart. We have 1 test, 2 tests, 3rd test coming up. If, and I say if, this breaks out and retests the top of that trade line, I think you can expect more upside. However, if it breaks it, consolidates, fails to take out that high there, then comes back underneath the line and retests it, I think I would look to go short. And I think really the thing that I need to make perfectly clear is generally I'm not looking to predict what the market is going to do. I'm rather looking to act off what the market actually does. And there's a subtle difference there. So what I'm saying is, if this happens, I'm going to do that. If that happens, I'm going to do this. I'm not going to say, oh, look, this is going to go long now because of X, Y, and Z. Yes, I have that opinion, but that doesn't really give me a trading opportunity. What gives me a trading opportunity is waiting to see what the market actually does at these critical levels. Critical levels for me are primarily trend lines / trade lines. I turn trend lines into trade lines. And the reason I call them trade lines is they're not necessarily trend lines. I mean, that's not a trend line there, for instance. That may be construed as a trend line. but this is certainly not a trend line because it's not taking the highs into consideration. It's just inside the trend, if you like. And that's the reason I call them trade lines, is because that's where trades come from. For me, they come off those lines. So that's where I'm looking for my setups. So on this occasion, I'm looking for exactly what I just described, a break and a retest to tell me it's going long. But if it comes back underneath that bar and closes, then retests it, then I'm looking to go the opposite direction. I hope that's clear. So have I got an opinion? I can see why you'd want to go short, because you have got a clear double top here. And you are looking, in my humble opinion, for a significant lower high. I don't see that right now, to be fair. There was one there which drove it back to here. And you'll remember probably my analysis of a couple of weeks ago, where as soon as I saw these two levels, 94.50, 93.50, start to give me the indication that we were above a significant level, this level here, but below the next significant level, which is this one here. My opinion was that this is going to range for quite some time. And at that point, that's pretty much what is transpiring. So until we're below this level, it's really tough to go short unless we're up here. And I hope that makes sense. So exactly what George and I were talking about before, trading short is best done from the top of a range, and trading long is best done from the bottom of a range. So in that regard, you are probably looking at the bottom of a range, which means that for the time being, momentum will probably be to the upside. Now, whether it actually makes the top or not, who knows? Impossible to tell. And that's why I just trade setups rather than, okay, my opinion is eventually we'll go short. But at the moment, I'd find it very, very difficult to go short until we get that significant lower high. So I hope that helps rather than confuses. And that's the dollar, which converts in most instances to dollar weakness if you're looking to trade the dollar short, if you're looking to trade long dollar strength. So with dollar yen at the moment, I've got to be thinking, going back to exactly what I've just described, we are coming off the bottom of a range and therefore headed towards the top. This tends to negate that, I'd have to say. And this is where, as I said before, I get completely bamboozled with dollar yen, because to my mind, dollar yen is actually at the top of the range. And therefore, on this chart, I'd be looking to trade it short. And that's why I can't trade it properly. I really just can't trade dollar yen, because dollar index is telling me go long. Dollar yen at this chart is telling me quite the, it's not telling me to go short. It's prepare to go short. And I can only do that as a lower high off here, or as a break back inside retest, which would create a lower high. So yeah, I hope that helps. But really, dollar yen is just, I hate it, absolutely hate it. So dollar Swissy, I think, was another question, which is probably going to be very, very similar. Yeah, look, Lewis, the yen has been weak for just the longest time. And I'm looking for that to end, I've got to say. John, yes, it is an hour later next week. That is true. For those who are not changing, what's it called, that thing? Bloody thing, dollar daylight saving time. Aussie Swissy, I've got to look at that, Lewis. Yes, in tick. Similar to dollar yen, Aussie yen, for, yeah, pretty similar, because both the Swissy and the yen are considered risk off currencies, Aussie risk on. Yen is rather weak currently, that goes along with that, and dollar yen is a beast of a pair, 100%, John, 100%. Righto, so let's look at Aussie Swissy, was the one we want to look at. don't have that chart either. Aussie Swissy. Okay, interesting bar. That's an hourly chart. Yeah, look, whilst ever this is here and not up here, I'm looking for shorts. But the minute it takes out these highs and closes above them, I then have to wait. But I may not have to wait long. You know, if my bias is short, which on the evidence that I have in front of me right now, I have reason to be, not conclusive, I've got to say, but I think I've been speaking about this for a long time, kind of coming back to me now. That level there, to my mind, is the key level of this chart. Why? Lows, 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 support, 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 from 2015, I might add, when the decoupling of the euro to the Swissy occurred, right through to 2019. So 4 years above that line. Since then, we've been below that line, except for one occasion. Now, I can't remember. I think I went through this with Ash. So the 1st of February this year until the 1st of July this year. Why? There would probably be a reason that just is not springing to mind. There's probably a fundamental reason why that occurred. But now we're back underneath it. I find it very, very difficult until there's a close above there now, which looks imminent, I've got to say, but it's not there yet. It's got to take out this high, right? The same high I was talking about. That's still a game changer bar right there on the weekly chart. I think I considered trading this, didn't I? Aussie, or was it Aussie Yen? Very, very similar, as you said, Lewis. You know, I still think that's not the worst trade on the planet because of the significance of that level. What is it, 68.35? So, you know, until we get that big close above that line, which does look imminent, I've got to say, we've got it on the daily chart, but until we take out these highs, you've still got a dominant key reversal bar or game changer bar, both on the daily and on the weekly. So to my mind, I can't trade this long just now. Anything that gives me this lower high with a tradable bar, I'd be willing to trade. But as you say, as you so correctly point out, Lewis, the yen is as weak as lolly water. And I suppose for that reason, you would have to favour the yen over the Swissy because the Swissy seems to be, you go to the Swissy yen chart. Swissy yen, where are you? There. That's how strong the yen is. Sorry, the Swissy is against the yen. And yes, the one thing that we must keep in our mind at all times is the longer that goes on, the more likely we are to see retracement. And that's kind of where I get my directional bias from in some instances. You know, the longer it goes, and you've probably heard me say many times before, this has been going in the one direction for 8-9 weeks or whatever the case may be. To get a handle on that, here's one here, 1, 2, 3. Oh no, it's a red bar. But if you see a currency or any chart that's been going long for 9 weeks, 10 weeks in a row, whatever the case may be, go back in the chart and see how many times that's happened before. And that is a very, very strong indicator as to what is about to happen. May not happen same day, same week, but it will happen because it's pretty much how George and I started talking today. Currency pairs have this incredible I was about to say ability, but it's more than an ability. It's a need, if you like, to revert to the mean. And wherever you get outside of that mean, that's why I use daily pivots a lot, right? Whenever you get outside of that mean, you need to start then looking and thinking that price is going to come back towards that mean at some stage. You don't need to, what scalpers do and scalpers can, it's a different game, but that's the thought process that kind of needs to be happening. Wow, this has been going long, 9 weeks in a row. Shivers, how many times has that happened before? Go back in your chart and have a look. And sometimes you'll go back to 2005 before you actually see that happen. That's where you need to start thinking, don't want to go long now. Not necessarily go short, but look for the indicators that tell you that this is about to go short. All right, I think I've answered the questions, and I hope that's helped in some way, shape, or form. Let's go back and see what's going on with the pound. Let's come back underneath here. Doesn't want to leave the pivots, does it? And there's another pointer for you. Whenever the pivots daily and weekly close together, you are going to see consolidation. But when it breaks, it will break, and it'll break hard. Now, if I'm looking at this and I'm a slingshot trader, I want to trade the breakout here. So for that reason, well, not for that reason, we're trading a breakout anyway. I'm going to stay in the long for today. Sorry, I'm going to stay in the breakout mode for today, because this is telling me that when it does break, it'll break hard. The one thing that can get us into trouble is before it does, it'll go in the opposite direction, of course. That's possible. The one that we've been in for a few days, I think I'll stick by it for now. If I see it close, maybe on a 4-hour chart, close down here, I think I'd get out of it. Been in it too long, which means that momentum is non-existent. Dynamics have changed, so it could go either way. If I'm looking at this chart, I can see very clearly that we're at the top of that range and therefore likely to go short. Interesting. And that goes with everything else that I've discussed before. Top of the range here, we're really looking for this to go short. Just looking for a lower high, aren't we? That's what we're looking for. And by jingo, this could well be it. This could well be it on a 4-hour chart. Watch that candle closely. I'll be looking to trade that. Whether I can or not is another story. We're right at the bottom of the range, 35 pips. Yeah, you haven't even got 1-to-1 to the bottom, and that kind of cruels it, because you're going to expect to bounce at the bottom. Not easy, guys, not easy. No, I'll stick with it. See how we go. Close below here. I think I'd get out of the one that we've been in for some days. And of course, we're not in the one for today. Haven't even spoken about euro dollar, or have we? Yes, we have. Okay, so I don't need to cover that one. In the middle of nowhere at the moment. But what's our edge on euro dollar, guys? What do we know about euro dollar that happens many, many times? Most often. Happens most often on this pair, this currency pair. Far more often than it doesn't. No one's having a crack. How about daily pivot test? How about a daily pivot test? They've crossed over. This is a bad sign for the euro, I've got to say. Bad sign. And coupled with what I said before, game changer bar, inside bar, short there, stop loss there. Yeah, this is not looking good for the euro, I've got to say, but we haven't had a daily pivot test. So can I go short? I can, but I need to be in complete understanding that we could well at some time today get a daily pivot test. Therefore, if I did choose to go short here, and I don't see a short entry, I've got to say, until we get a false break of that line, I would have to be thinking perhaps a long to the daily pivot at small risk. But there's a slingshot set up straight away. 13 pips. High of the day is there. I haven't got enough room. Frustrating, isn't it? The market knows, you know that, don't you? The market knows that there's a route, there's just so tempting there to take it, but I can't trade it because it's not within my rules. Look, I think so, Lewis. I think so. It is completely key resistance. No question about that. And they have crossed over. That's why I say this is not a good sign for the euro. And coupled with that daily scenario, I think long to go short makes perfect sense, mate. Absolutely perfect sense. So triple top, nice little lower high in here. Yeah, I'd be in. I'd be in. If you can find a way to trade at the daily pivot. Yeah, look, it's there. It is a slingshot setup, but you've got to, and I don't do it, right? My rule is I don't trade to the high of the day or the low of the day if I'm going the opposite direction without taking profit. Now, I could take a short profit. So I've got about 5 pips here, I think. By the time the spreads are taken, I've probably got, which just doesn't get me there, right? So I've got to then take profit at 3.5 pips by my rules, or take the risk that we go to the daily pivot without coming back. It's just not in my playbook. But I totally see why you want to do it. But that is a classic slingshot setup, no question. And I probably look back on this tomorrow and say, well, did exactly as it told me it was going to do. I think I'll look for the short, however, when it gets to here. But tell me tomorrow. Tell me tomorrow how you went if you're going to trade it. I'll know because I'll see it, obviously. Guys, I've got to go. I think we've covered everything, have we not? And then some. Kiwi Cad. Look for that lower high on Kiwi Cad. There's that beautiful false break. 1 candle false break. Look at that. Yummy, yummy, yummy. Aussie Yen. Still hanging around here. If it goes long, obviously we'll cancel the order. But at this point, I'm still happy to keep that where it is. Didn't mention Euro Pound. Euro Pound did exactly as we would like to do as of yesterday. We're looking for short here, but we were looking for a lower high, as always. I don't think it gave one. I didn't see one. Off the top, no lower high until you got to there. That was a bit late in the day. 30-minute chart. Yeah, you would have had to take a big risk, but there it is. There's that bar there. Big risk to trade through the pivots. But there it was. There's your lower high. Gee whiz, they're consistent, aren't they? They're really consistent. 1 o'clock, John. You got me. I'm in. Okay, so I will bid you adieu and thank you for your company, all my trading buddies. Thank you once again for being here. We'll do it again tomorrow. I'll be in first up and hopefully give you some form of direction that makes sense. And I hope something did today. If not, then we'll try again tomorrow. And Ash, of course, will take over. It is the last Tuesday, absolutely. So as of next week, no Tuesday, no Wednesday, but Monday will include myself, Ash, George, perhaps even Ainsley. We might even stretch it out a little bit to accommodate all that. And of course, next Thursday. And don't forget, we're an hour late next Monday as well. Sorry, not for all. If you're in the UK, it'll be the same bat time of, no, it won't. It'll still be an hour late because they coming off daylight saving. If you're in Australia, it'll be an hour late. If you're in Singapore, it will be an hour later as well. I'm going to stop there because I'm going to get completely confused. Thanks, John. Thanks, Lewis. Thanks all. I hope you've enjoyed yourselves today, and we look forward to doing it all again tomorrow.